So sup y'all, to another training video. Today I'm going to show you how to spot inversions within the market. The first thing that you need to actually understand before you can spot inversions within the market, you need to understand fair value gaps and what fair value gap actually is. So a fair value gap is a 3-candle formation, and what do I mean by that is that the first and the third not fair value gap, the candles, the first and the third candle wicks do not uh, or cannot overlap. You can see that the wicks are not overlapping, which essentially creates the fair value gap. You can see also on the incorrect example that you do not have the fair value gap. So the wicks are actually overlapping and there is no gap within the market. Yeah. So with that in mind, we can actually scale down to some time frames. And you don't want to look for inversions or fair value gaps generally like randomly within the market. You want to see them and spot them. You want to spot them at some liquidity levels. What do I mean by that? When liquidity swept, fair value gap or inversion is like a entry model to that. Yeah, so here's an example. We swept buy side liquidity. We had the latest fair value gap was this, but under that was another bullish fair value gap. And when we have two fair value gaps, I usually just combine them into one and treat it as one fair value gap. So yeah, we dumped down into it. We respected the fair value gap, failed to close above the high, essentially. Then we reswept the high in form of internal liquidity, and then we sold off, inverse the inversions. Also, we had change in state of delivery, so that's another that's another additional confluence. So yeah, we then retapped it, and an entry for shorts would be somewhere like this. Yeah, we can then target the external sell side liquidity, etc. Yeah, so there's another example. We swept the buy side liquidity, and you can see that on the 1 minute we didn't have any meaningful fair value gaps. Yeah, you can argue that we have this and etc. But usually at a point like this, when you have really choppy price or the latest leg up, I just scale up the time frame. You can see on the 2 minute it was a little bit more clear. Yeah, we have this. On the 3 minute it was where it was. Yeah, it was here. And on the 3 minute it was the most clearest. So yeah, we had an inverse fair value gap. We retabbed it in form of entry model, stop loss above the candle body high, and target the external sell side liquidity. Yeah, you can see you could have catch 3.83 risk to reward trade. So yeah, let's find another example. Even something like this, you can see that we have internal sell side, the buy side swept, and if you look down, I mean down here, when you can see the times, you can see that at 9 a.m. a new hourly candle opened. We essentially manipulated, took out the previous 8 a.m. candle high. We reverted from that, and you can see on the 3 minute it's not quite clear. So the scale down to the 1 minute maybe. You have to understand that price is not. You can't understand price in terms of time frames. You have to understand it in terms of that you are seeing the same thing through different glances. Those time frames just aggregates the candles in different formation, but it's basically the same thing with different glasses. You see what I'm trying to say. Yeah, so on the 1 minute we have these two fair value gaps, so we combine them into one. In this scenario, the inversion gets barely ran through. We probably had low volume. You can see that the price action is really choppy. We do not have top wicks, bottom wicks on the candle. We have little literal gaps within the market. But yeah, you can see the retap of the inversion. Even if we had the sell limit set, we could have set it on the buy side on the candle body high or the actual high of the move and target like the mid time frame sell side liquidity. You can see that we caught a nice two error trade. Maybe one come off here and leave it as a runner all the way down to the external sell side. Yeah, you can see that we stopped at 7.13 risk to reward ratio. Let's find some bullish example because we only had some bearish examples. Yeah, something like this. We swept external sell side. We then internally swept the sell side. It was, you can see that it was 16 or like 4 p.m. in the afternoon. We opened a new hourly candle. We swept the previous low of that candle. And you can see on the 1 minute we didn't have any clear fair value gaps, so we scale up to the 2 minute maybe. And on the 2 minute, we also didn't have any clear fair value gaps. We could have had this like in terms of continuation model. Yeah, we have this fair value gap respected and went up, but this video is about inversion, so we actually ignore this. On the 3 minute, we have like this small fair value gap, but I would not take this as valid setup, but it gets tapped and continue up, so yeah. We can scale up to the 5 minute, and if we do not get anything on the 5 minute, I would just not trade this. Yeah, because there's not an entry model. There could be like external buy side, external information in terms of what is the current draw on liquidity. We have the sweep, we have everything what we want, but we do not have the entry model, and the entry model is sometimes the most important part when taking a trade, because the entry model actually times the market for you, if you know what I mean. Because when you're a trader, you actually want to time the market, and the entry model allows that to you. So yeah, let's find another bullish example. Again, we swept external sell side. We scale down back to the 1 minute. We scroll back to it. Where was the entry? Lost it. Not this, the previous one. This. So we swept the external sell side. The latest fair value gap was this, and the recent price lag. In terms of the recent price lag, I understand where is the change in state of delivery. So like the latest series of down close candles for a bullish example. So in this scenario, it would be these 3 down close candles. So that would make a change in state of delivery for us as well as the inversion. You can see that we also created another bullish 1 minute fair value gap, but yeah, we didn't get a tap, we didn't get an entry, so that's it for me. You can see that we sweated buy side, but didn't get an entry in this example. So yeah, this is how to spot inversions within the market and how to understand fair value gaps. I hope it was helpful. See you in the next one. Peace.